Life insurance and broccoli have a lot in common. Not many people like either one. Hello and welcome to a short presentation on how life insurance might benefit retirees. I'm Dr. Shelby Smith of the Retirement Pros, and my objective today is to help you understand how life insurance can solve problems faced in retirement. But before we get started, let's talk briefly about something else: taxes. Taxes and life insurance have a lot in common, as we'll see shortly. Our governments, local, state, and federal, are living beyond their means. They're spending money they don't have. This cannot continue indefinitely because there is a limit to how much we can borrow and print. Washington knows that spending and revenues must come into balance before forces beyond their control force a correction. They can A, cut spending, or B, raise taxes. And I think we all know that meaningful spending cuts will not happen. So that leaves higher taxes. The consensus opinion is that federal taxes of all kinds will rise soon and substantially. State and local governments are also facing revenue spending imbalances, but by law, their budgets must be in balance. So services are being cut, property and other taxes are rising, workers are being laid off, and revenues from all sources are decreasing. The only feasible solution: state and local taxes will increase substantially and soon. No doubt you want to pay your fair share of taxes, but not one penny more. I bet you'd love to reduce your taxes if it were easy and legal, because $1 less in taxes is $1 more for retirement. The number one fear of most retirees is running out of money, and saving taxes is one way to lessen that fear. Now, everyone hates life insurance, but probably not more than they hate taxes. Life insurance can reduce taxes. Every financial product has its advantages. Bank deposits have FDIC insurance that makes them super safe. Many investments benefit from tax breaks, like capital gains and lower taxes on dividends. Life insurance companies provide tax-deferred and tax-free benefits. For example, tax-deferred annuities let you escape taxes on earnings until you actually withdraw the earnings. Life insurance offers tax-free benefits to you and your final beneficiaries. Income tax-free benefits are part of your retirement plan, and that's what I want to talk about. Let's say you own investments, real estate, or other assets that are more than you'll need for retirement. What you'll not need for retirement is earmarked as your legacy to your loved ones. Of course, not every retiree is this fortunate, and in a moment we'll talk about other ways life insurance can be used by average retirees. Federal income taxes are now levied on estates of $5 million or more. However, the estate size subject to taxation is expected to drop to $1 million in 2013 and beyond. The federal estate tax starts at 35%, and the top estate tax rate has historically been 55%. That's 55 cents of every dollar is taxed away from you. States also have inheritance taxes on top of the federal estate taxes. Since retirement can last 30 years or longer, the value of real estate, farms, ranches, and family businesses are likely to grow substantially during your retirement. Thus, you might want to anticipate an estate tax even though it wouldn't currently apply. From where will the money come to pay your estate inheritance taxes? Will heirs have to sell the farm, ranch, real estate, or family business? If so, will the market be good or bad at that time? If in 20 years your estate will be $5 million, and estate plus inheritance taxes are 50%, $2 million will be needed to settle your estate. Where will your loved ones get that kind of money without selling your assets? Well, life insurance to the rescue. You could purchase a $2 million life policy now and pay annual premiums for a set number of years. Once the policy is paid up, your premiums stop. You can borrow the cash value tax-free if needed, and your estate and heirs will get $2 million tax-free to pay the taxes. The business, farm, ranch, or real estate stays in the family because you planned by using life insurance. Are your assets exempt if you have a will? No. Some retirees avoid estate taxes by using various trusts, but generally this is economical only for large estates. Saving estate taxes makes life insurance financially smart, even if you live well beyond your expected lifetime. You should not look at life insurance as an investment, even though generally the rates of return are more than competitive. If you die prematurely, the earnings rate from life insurance would be astronomical. But if you live longer than expected, it could be less. Either way, it greatly exceeds the estate and inheritance taxes you'll pay without the tax-free benefits of life insurance. You should work with a financial advisor so your exact needs are met, because one size does not fit all. Let's say you're worried about spending your later years in a nursing home. By the way, ladies, this is far more likely for you than your husbands, as a trip to any nursing home will show. Not a lot of gentlemen, are there? Just ladies. So husbands, take care of your spouse by making sure expensive nursing home costs are covered now. Contrary to what you might think, Medicare does not cover long-term convalescent care. There's a welfare program, Medicaid, that does, but don't expect very good care. There are 3 ways to cover long-term convalescent care. 1, set aside sufficient money and self-insure. The problem here is how much is enough, especially if life's lottery deals you a cognitive impairment like Alzheimer's. 2, you could purchase a traditional long-term care insurance policy that pays if you actually go to a nursing home or receive long-term convalescent care in your home. The problem is, if you don't use it, you lose it. And 3rd, you could purchase a life insurance policy with a convalescent care rider that provides tax-free benefits if needed. This option avoids use it or lose it because the policy still pays tax-free death benefits. Life insurance with a long-term convalescent care rider will pay a multiple of the death benefits over a set period if long-term convalescent care is needed. Here's an example. Let's say your life policy might pay $250,000 at your death, but if long-term convalescent care is needed, it could pay $750,000 tax-free in equal installments over 4 years. If convalescent care is not needed, your heirs will still receive $250,000 tax-free at your death. You'll still have access to policy's cash value in case you need the money. Some policies even refund all the money you paid if you later change your mind and cancel the policy. So many retirees use life insurance for this purpose, especially the ladies. Are you being forced to take required minimum distributions you don't need from your retirement account? What's more, do you wish you didn't have to withdraw the money and pay taxes on it? If you're taking money and putting it in the bank or investments, there may be a better way if you've earmarked the money for heirs. It might be smarter to use this money for a life insurance policy that would provide your heirs tax-free money. You'd still have access to the cash value if needed during your lifetime. We've only talked about 3 ways for retirees to use life insurance. However, there are many more smart ways to use life insurance to avoid paying taxes. Naturally, you must be insurable to get life insurance. This doesn't mean perfect health because most people that are not chronically ill can get life insurance. If you think future taxes will rise and tax-free life insurance could meet your needs, I encourage you to discuss life insurance with your financial advisor sooner rather than later. There's an old dictum in life insurance. You can always be early, but never be one day late. The future is uncertain. So if you think life insurance is good for you, you need to act promptly. By way of summary, we've talked about 3 ways life insurance can benefit retirees. First, if your estate will be taxed at your death, tax-free life insurance money can keep your estate intact and in your family. Second, if you're fearful of needing expensive long-term convalescent care, only life insurance can provide tax-free living benefits as well as tax-free death benefits. And finally, if you are being forced to take money you don't need from your retirement accounts or have more money than needed for retirement, you can use life insurance to leave a tax-free legacy to your loved ones. The smart way to investigate what is best for your circumstances is to discuss life insurance with your financial advisors. Please make sure you understand the coverage and that you can afford what is being recommended without sacrificing your retirement lifestyle. Thank you for your time. I sincerely hope all of you have a wonderful day, an even better tomorrow, and a long, happy, and worry-free retirement.